Hi, I'm Martyn McCathie, investment specialist here at Wilson Asset Management, and today I'm joined with WAM Alternative Asset Portfolio Manager Dania Zinurova. Dania, it's been a quieter period in private markets over the last 12 months. Can you just touch on what you've experienced and what your expectations are looking forward in some of the private market exposure through the portfolio?
Yeah, sure. It's been a challenging but also exciting period. Challenging in the sense that in 2022 and to some extent 2023, we really saw the market slowing down when we look at the number of the transactions, M&A transactions, when we look at the volume of the transactions. And there was really this strange dynamic where sellers wanted to exit, and buyers did have a lot of capital to invest, but no one really knew what would be the right valuation approach and where the monetary policy will lead the economy going forward. So there were lots of questions, lots of uncertainty in the market. 18 months forward, 24 months forward, we already see definitely improved fundamentals from the opportunities perspective. Much more attractive valuations. More transactions, still not the same volume, but it's picking up, and we see it through our portfolio. When we look at the private equity part of the portfolio within WMA, it has been growing exponentially over the last 12 months. Despite the fact that we've been exiting our maturing investments, and we already exited, we just looked with you at the numbers recently, nearly 80% of the inherited part. So despite the fact that we've been exiting, we were committing the capital, and the capital has been deployed. And the type of the deals we are getting in the market now, they are great from the entry valuation perspective, but also from the quality perspective. Why it is exciting going forward? Because my expectation is once we see monetary policy easing, we will start seeing improvement in valuations on the investments in our portfolio, and this will be great.
October marks the 4-year anniversary of WAM Alternative Assets, and I think that we've talked a lot about the portfolio revitalisation. Can you just give shareholders a bit of an update on where we're at in that revitalisation journey, and also maybe talk through some of the exciting new capital deployments that you've made in the last couple of months?
Sure. Yeah. So 4 years,
Long time.
Long time. So. Look, the portfolio now is quite a different portfolio compared to where we started. Different in the sense of the portfolio construction and what is included. We added new asset classes, we invested in infrastructure, private debt, we brought new strategies in private equity such as turnaround, transformation, buyouts. We really applied in a more disciplined manner investment themes approach or thematic investing approach within the portfolio, which supports long-term growth and also resilience of the portfolio. From the risk management perspective, I feel we've also achieved a lot. We had over 40% allocation to one single strategy 4 years ago. It was water rights. I really like this asset class. I think it's a great diversified, has a lot of potential to continue delivering attractive capital growth and income returns. But that was a concentration risk within the portfolio. Around January, February next year, we can expect to be at about 10 to 15% in water rights. So that was really a good work, gradually decreasing this exposure.
But still good exposure to an asset class you
absolutely,
like.
Absolutely. And that's the goal.
Dania, just with that backdrop, can you maybe just expand on the recent transaction completed by Adamantum and Quantum IP?
In terms of the new transactions, we were really excited to see that Adamantum Capital, one of our investment partners in private equity, they have successfully completed public to private transaction. And that's another, we talk with you about this. Where do you source those deals now in private markets? Outside Australia, still 80 to 85% of new deals, they're public to private. In Australia, it's probably less so, because also it's a different market, more concentrated listed equity market, but we will continue seeing more of this public to private transactions. In fact, we have another investment partner who just completed a very similar deal. So their deal was in a company that deals with intellectual property and trademarks law. There are not that many businesses in Australia that have been successfully growing in this area, and I know for the fact that other peers of a comparable size were looking at this transaction as well. The business is called Quantum IP. Why we like it? Because we do think there will be continuous innovation in technology, AI, cybersecurity, and other sectors. And so this type of businesses, they are essential businesses that protect those new innovations or patents and help them grow and successfully execute their strategies. And they are the type of the deals, the type of the businesses that investors would not necessarily think about as a very attractive proposition. But when we think about the growth that they will experience, but also think about the type of the revenues that underpin this growth, this is where you want to be in private equity. So that's the type, these are the type of the transactions we see in the portfolio. In terms of the sectors, I think we will continue focusing on our 4 investment themes, like growing demand for food, growing aging population, digitalization, and then climate change, energy transition.
Great. Dania, we've talked about the portfolio revitalization. Since Wilson Asset Management became investment manager, we've exited 13 investments at a weighted average return of 34.5%. Can you just talk us through what you expect from exits going forward? Timeline, I know we've talked a lot about diversifying the portfolio from a maturity profile and kind of how it should work on an ongoing basis.
Yeah, the idea is that private equity will continue growing as a part of the portfolio. Why? Because private equity as an asset class has a great potential to deliver outsized returns. So in general, if you own residential property, your expectation will be that the value of this property will double in 10 years' time. Yep. With private equity, when you invest in private equity strategies, your expectation will be that you'll get 3.5 to 4.5 times money invested, but in 5 to 7 years' time. So it's an asset class with a lot of potential to drive the growth and investment performance within WMA portfolio. Now, I cannot guarantee that every exit will be a stellar exit within the portfolio, but that's also my reasoning for building a more diversified portfolio of high-quality assets, high-quality businesses. Going forward, I would expect 3 to 4 exits per year, underpinned by fairly reliable, strong and resilient yield that we receive from defensive strategies, and the portfolio maturity will be diversified in a way where every year we'll see exits and harvest the returns.
Perfect. Thanks, Dania.